I looked at the chart. I mean, I've done a lot of technical work. I don't feature it a lot in the Morgan report, but we look at it from time to time. It looks like it could do a head and shoulders top. I really doubt that with the all this going on geopolitically, the war drums, the conflicts increasing with Iran involved now. I mean, I can see a correction, a high-level consolidation further. Silver's launched later than gold. We all knew this time gold had to lead the way it has. I really want to see silver over 30. And from my perspective, Elijah, to finish, I do not see this as the high point for the year. I think we're going to get over 30 for silver and probably hit the 25 mark at least in the gold market.
David Morgan of the Morgan Report forecasts continuing the bull market, anticipating silver potentially exceeding $30 and gold reaching at least $2,500. Despite the recent record high in gold prices, surpassing $2,400 an ounce, investors may not witness significant downside from current levels as the World Bank projects an 8% gain in the precious metal this year. In its 2024 commodity market outlook, the World Bank predicts gold prices to average around $2,100 an ounce. This bullish outlook follows a 4% rally in gold prices during the year's first quarter, signaling an upward trajectory. Morgan reflects on gold's recent price movements, underscoring its nominal all-time high in US dollar terms and stressing the importance of considering purchasing power over time. The decline in the dollar's value, losing 97% of its worth since 1913 and 25% of its purchasing power since the start of 2020, highlights the currency's inflationary state and underscores the need for financial diversification. Morgan draws parallels between Mike Maloney's transition from real estate to gold and a potential shift in Chinese investment behavior towards gold. Given China's substantial population and influence, Morgan suggests that such a change could have significant implications. Moreover, gold has emerged as the preferred investment option for people in China, as reported by the Economic Times. China's gold bars and coins investment surged by 28% to 280 tons in 2023, according to the Gold Demand Trends Full Year 2023 report by the World Gold Council. This trend further underscores gold's growing appeal and significance in global investment strategies. Come along as we explore David Morgan's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
The precious metals markets are pretty much in a consolidation phase. You could say from a trading perspective, they're overbought and they need to take a breather, the old adage, back and fill. So we need to gain another level of support for both gold and silver. But adding on to what you opened with, Elijah, wasn't just 3 months ago that we were kind of wondering, is 2000 going to be support or resistance, as you said? And of course, obviously, it's now support. We got a nice big move up past 2,400 US dollar terms. And I've been asked to write a missive for a publication, which I write for 3-4 times a year. And he wanted me to comment on the gold's all-time high. And in that missive, I said, it's only a nominal all-time high. If you use the U.S. government CPI calculator, so we're using their numbers, you need $3,222 gold to equal the purchasing power of a 1980 $850 gold. I think that's important, really not for maybe our viewers, but someone that's coming on board now, like, gold is too high. It's its all-time high. It's all-time nominal only. So coming back to the other question, I think I looked at the chart. I mean, we look at it from time to time. It looks like it could do a head and shoulders top. I really doubt that with the all this going on geopolitically, the war drums, the conflicts increasing with Iran involved now. I mean, I can see a correction, a high-level consolidation further. Silver's launched later than gold. We all knew this time gold had to lead the way it has. I really want to see silver over 30. And from my perspective, Elijah, to finish, I do not see this as the high point for the year. I think we're going to get over 30 for silver and probably hit the 25 mark at least in the gold market. And if we go back to this market, meaning this bull market that we're still in, and we've had a long pause for a decade or more. But if you look at when Mike Maloney started, Mike did something that was way outside the box for almost anybody else I know. And what he did was he wrote a letter to Robert Kiyosaki on the flight back from GATA 21. And we had breakfast that morning. And he made a case, a very strong one with Robert, about real estate to gold. And it caught. And it was perfect timing because Mike said real estate's overpriced, metals are underpriced. You ought to consider switching out of one asset, not totally, but, lightening up on one and building a position in the other. And it couldn't have been more correct. Well, I look at that as a small analysis to what's going on in China. China has real estate. Well, if Evergrande and all these other big firms in China with these ghost cities and these apartments that are half built and all the, let's say, real estate failures, they did a switcheroo from real estate being the most stable, best investment you can make and move back into gold. And that's a 1.4 billion population. So I think that's what's really going on. I think it's not so subtle, but I don't think too many, I'm probably the first one on your show to say it. Call them as I see them, as you well know, you've known me for years. And that's how I see it. So it could be a lot bigger than, the Chinese like gold. If their whole consciousness in investing shifted from gold's better than real estate, we're just getting started.
Morgan proposes that for the next monetary system to thrive, it may require backing by gold, particularly considering the significant gold reserves held by countries in the East. The U.S. formally abandoned the gold standard in 1971 during President Nixon's administration amidst growing inflation and looming concerns of a gold run. This decision marked the end of the Bretton Woods system, as the dollar's convertibility to gold was terminated. While silver was more abundant relative to gold, a bimetallic standard was established in 1792. Initially, the officially adopted silver-to-gold parity ratio of 15:1 aligned with the market ratio. However, the declining value of silver post-1793 led to the displacement of gold from circulation, as per Gresham's law. Morgan traces the historical flow of gold from Great Britain to the U.S. and now to China, suggesting a potential shift in global financial power towards China. No government currently utilizes the gold standard. Britain ceased its adherence to it in 1931, followed by the U.S. in 1933, and the complete abandonment of remnants of the system in 1973. Let's get back to the interview.
The idea that he who owns the gold makes the rules, that's pretty much been a fact for centuries. I mean, you get somebody as smart as Martin Armstrong, and he probably argue that point, but from a long-term perspective, it ebbs and it flows. You go from a gold standard, which isn't the best, but it's been one of the best, into morphing to a fiat standard that collapses and then come back into a asset-based currency. So it kind of goes, and this is very broad brush. It's not the exact monetary history, certainly not, but it's sound money, non-sound money, failure, back to sound money, off sound money, failure, back to sound money. That's kind of the, again, broad brush view. So if that's the case, that for the next system to really work, we may be proposing a CBDC that doesn't work and needing to back by gold, and the East has most of the gold. And there's also a subset to that as a kind of a proof, like you're doing a proof on a math equation. And the proof is if you follow where the gold trail is, it's always the producing nation. So if you go back pre-U.S., where the U.S. held most of the gold, it was held by Great Britain, and they were the main producers. Yes, it was a colonial system and all that, but under the U.K. umbrella, they produced the most and had the most gold. Then you go to World War II, and the U.S., produced the most production, and mostly the war machine, and then post the war, housing, cars, freeways, everything else, and all the gold, not all, but the lion's share of the gold went to the U.S. Now the lion's share of the gold has gone to China. So it just follows. You can say, well, wait a minute. If you just follow the money, one of the best things we can do in journalism, it doesn't, get the personalities out, get the bias out, get the politics out. Just look at where the money's flowing. It's gone from the UK to the US to China. What does that mean? Well, it suggests strongly that you're right, that we're going to see the Chinese have the commanding, maybe not currency, maybe not global currency, but certainly a much higher status in the financial market or the monetary system than we see today. And if you take it a step further and look at their CBDC, which is by far the most advanced and most utilized in the world, maybe that's it. And they're just using their gold as a as a backup plan or as a subtle way to reinforce their power if they get resistance to it. I don't know. I don't know the future, but I do know what it looked like in the past. And as Mike Maloney says, the further you can look back, usually the more you could go forward. So there's my 2 cents.
Rising inflationary pressures are compelling the Federal Reserve to extend its restrictive monetary policy beyond initial projections. The World Bank has highlighted the possibility of heightened commodity price inflation in the coming year, presenting a daunting challenge for central banks worldwide. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.